All right, so good afternoon, everyone. And today, I am going to go through structure, right? So anyone following the strategy that I was sent out last week, where I typed it out in steps for you guys, all right? You will have noticed that, I have step one is top-down analysis, right, which is identifying structure. Step two is to identify patterns. Step three is to look for your point of interest, which you would then be looking for a break of structure and retest. And step four, you're going to be looking for your entries, right? So um, over these next couple of bootcamp sessions, I will be basically going through the strategy thoroughly, and so that you guys can practice more. You can understand the setups that are being sent out. You know what to do. You know how to trade them. And it's all about you being confident in your trading, right? As I told you guys before, try not to trade in doubt, right? Try not to trade in doubt. You don't want to be in a position where you're taking a setup because it look like as if it's gonna do this, or it look as if it's gonna, or maybe it's gonna do this, or maybe it's gonna do that. That's not how you want to trade, right? Obviously, the market is still gonna do what it wants to do, right? And you cannot, um, you know, you will not be in a position to control the market. But at the end of the day, um, you want to be confident when you're trading, and that's very, very, very important. Being confident in your trades, right? So, so like I said, the first step is top-down analysis, right? The first step is top-down analysis. And today I'm going to focus on Euro GBP with the top-down analysis. We're going to go through it. We're going to look at the steps in top-down analysis, and how to identify good, clean, healthy structure, right? So top-down analysis is really you moving from a higher time frame, right? And you're dropping to lower time frames. You want to make sure that you identify structure on a higher time frame, because it's very important for you to understand what price is going to do when it reaches, you know, let's say a daily resistance or daily support, right? Obviously, the higher the time frame, the stronger the structure. So price would have, a very sharp move in either direction when it reaches this particular structure, right? So it's very, very, very important that you identify structure on these higher time frames, right? And move top down. So you're moving in a chronological order from the daily to the 4 hour time frame, and then you could potentially look at the 1 hour time frame. Now, the strategy that I would have put out there before to teach you guys how to get clear structure, or how to identify clear structure, is using the line chart, right? I know that when persons are starting off trading, I understanding what is support and resistance could be very confusing, and therefore I simplified it, right? For any person that is now starting, so a beginner to intermediate trader to advanced trader, they can all use this strategy. Very simple to identify true support and resistance, right? So, so the first thing you do, I look from the daily and I come down. I don't start from the monthly or the weekly. I could, but I choose the daily, right? Because I don't swing trade as such. and I am not a position trader. So majority of my trades are already intraday trading, right? So I try to be in the market for that trading day, right? So I'm gonna show you guys how to look for structure on the daily time frame first, and this is something I would have went through before, but we're gonna repeat the steps today. So it's very important that you have your trading journal, your book, wherever you make your notes. It's very important that you do that because what I'm gonna teach today will help you in terms of identifying structure better, right? So starting on the candlestick chart, and everybody can see the candlesticks. I'm going to change to the line chart. Why am I changing to the line chart? I find that the line chart, it gets rid of a lot of noise that candlesticks would have. The wicks, wicks from news, sharp movements from news and stuff like that. So all the noise that the market creates with the candlesticks, I am able to eliminate that with the line chart. So the line chart to me gives me clear structure, right? Clear structure. So once I change on to the line chart on the daily time frame, right? If the current trend is a downtrend, I am going to look left for an uptrend. So basically what I am doing is that I am looking for the opposite trend to what the current trend currently is, right? So if the current trend is an uptrend, I'm going to look left for a downtrend. If the current trend is a downtrend, I'm going to look left for an uptrend. And I am going to then box in the trend that we will be assessing, right? So we could see that we're in a downtrend here, lower highs, lower lows, right? So I am going to look for a uptrend, an uptrend, right? I'm gonna come to this one here, although it's some consolidation. I'm gonna use this one here, given that price is around this area. So let's use this. And what I tend to do first is that I identify the highest point and the lowest point of that trend that I am assessing, right? So you can use a rectangular box, you can use a horizontal ray. I'm going to use a horizontal line, right? And what we're looking for, right? What we're looking for is two things. We're looking for M's and we're looking for W's. That's basically it. When you're identifying structure, all you're looking for is M's and W's. That's it. All right. So there are three components of the M or the W that you're going to identify. The top of the M or the top of the W, the middle of the M or the middle of the W, and the bottom of the M or the bottom of the W. Is those three things. So you know a W, you know how W looks, right? Or M. So let's just scroll down here a minute. So three components, right? M and W, right? So you have the W and you have the M here. And there are three components that you're interested in, right? You're interested in the top, the bottom, and the middle, right? Top, bottom, and middle. Same thing for the M. Top, bottom, and middle, right? Those are the three components that you're interested in. for the M and the W. And these three areas you're going to identify with horizontal lines. You're going to mark them with horizontal lines. So what you're going to do is that you're going to use the horizontal line to get the bottom, the top, and the middle. That is what you're going to do on the line chart. And it makes it very easy. You will see how easy it becomes for you to identify clear support and resistance structure using this method. It's going to be that easy. Right? So let's look at it. All right, so we're looking at this uptrend here. So we're gonna go to here. We're gonna start. First thing I do is that I take the top of the trend and the bottom of the trend into consideration, right? So the first thing I do is I use a horizontal line and I identify the top of the trend and the bottom of the trend, and then I move inwards. So I always start from the top and the bottom, right, of the outer trend, and then I move inwards, basically, right? And then from there, you identify the M's and the W's. So remember, three components, right? So we're going to take a horizontal line and we're going to identify all three components of every single M and W that you see in the current trend you are assessing, right? So this is a W here. We already have technically the bottom of the W. Here is the middle of the W, right? And we could also go up here and consider this the top of the W here as well. All right, then we have a smaller W here. We technically have the bottom here with this line. This line should cover that. And we can go for the top, and the middle is basically the same height here. So we get that one as well. I can see another W here. So we're gonna go for the bottom, and the top and the middle are the same height. And then we have a lopsided W here. So we can get the top and the middle, right? And if the top and the middle is close to each other, you don't need to put two lines. If they're close to each other like this, you know, one line is sufficient, right? And so this is the daily time frame, and we probably just identify like 4 W's. And for me, this is it. We're done. There's nothing else in terms of any more areas that I have to look at per se, right? You don't have to force it, right? So just assess the W's and M's that your eyes can see. You don't have to force it. You know, price respects these areas. And if you look, know that I've changed it back to the candlestick chart, you can see how price respected these areas and how clean it was, right? How clean it was. So for me, even as you look left, you will see how price respected these zones, right? And I like this, especially for beginner trying to understand support and resistance. I think that this method is really, really easy and simple for someone learning to trade, to grasp. All right. So if I come down to the 4-hour time frame now, right, you can then start to see how price respected that zone. You can see every time price came to the, you know, one of our support areas, how it basically tested it and moved off, right? So you can see that this is support. You can see that this is support, right? Obviously, there may be one or two other areas that you can identify. So there's probably some support down here, but we have the main or the key structure from the daily time frame. And you can see it, right? You can see it. Right? So I just showing you guys how price respected the areas that we would have identified using W's and M's. It's clean. Right? You can see it. So I usually do this on the daily time frame. Sometimes I do it on the 4 hour time frame, but I don't do this on the 2 hour or the 1 hour or the 30 minute or the 15 minute time frame. No. When it comes to identifying structure, I only identify it on two time frames, the daily and the 4 hour time frame. And that's it. Right? Majority of the time I would just keep the daily one. But then you might see some 4 hour zones that you could possibly identify, right? Um, just to tighten it a bit more. So anytime I'm identifying structure, I look on the daily and the 4 hour time frame, right? So, um, so if I had to use the 4 hour time frame, I could see a W here just to tighten it up a little bit. So we got in the middle of the W. I could see the middle of a W here as well. Right? All right, I could see the middle of a lopsided W here. We already have the top and we have the bottom. All right. And that's it. That's just to clean it up a little more. So I use the daily and the 4 hour time frame to identify key support and resistance zones. Right? And then you would see how one of the reasons too, let me mention this, why I go to a previous trend and I don't use the current trend for support and resistance is because the previous trend basically gives you, for me, all the key areas that the next trend will potentially use. Right? So the trend that we would have used here covered all of the key areas that this current trend probably is going to use now. Excuse me. Right? So even here you can see that, price is now looking as if it's gonna come back up. And look how it rejected one of our zones, right? To go to a next zone that we would have identified using the previous trend. So for me, like, once you can master this, and it's very simple and it shouldn't take you long, right? All you're looking for M's and W's of the previous trend, so not of the current trend. Always look for the trend before. So if the current trend is down, you're gonna look for previous uptrend, and if the current trend is up, you're gonna look for previous downtrend, and that's very important. Okay, that is very, very, very important. So, like I said, step one in my strategy is identifying key support and resistance zones on the daily and the 4 hour time frame. The daily for the main or the key structure, the main areas. The 4 hour time frame, I use it as a cleanup. Right? So I just go on the 4 hour time frame to see if there are any other areas I would have missed, just to clean up you know, the chart. And you don't need any more lines. You don't need to drop to the 2 hour, 1 hour time frame and identify key support and resistance there, because the 4 hour and the daily is sufficient. You want to be trading when prices, you want to sell when price is high, and you want to buy when price is low, and you want to get in at some key areas that you can catch a good move, right? You want to get in at some key areas so you can catch a good move. All right. So step one is really identifying key support and resistance. Let's look at step two. Right. Step two, after identifying structure, is to identify patterns on the 4-hour and 1-hour time frame. So on the 4-hour time frame, you're gonna look at where price currently is, identifying the pattern that is in the current trend. So you're no longer dealing with the previous trend. That was only for support and resistance zones. But now you're going to assess the current trend that you're in, and you're going to look for any patterns, right, that you can identify. If you are not good with patterns, go to Google, look for some Forex chart patterns, download them, use them as your cheat sheet. Because there's so many patterns for you to sit down and study all of them. I think that, you know, it is not necessary. It's not necessary at all. Right? So you can just go to Google, type in Forex chart patterns, and you're going to see two types of patterns. You're going to see continuation patterns, or you're going to see reversal patterns. Print them, have them next to you as your cheat sheet. That way, when you're looking at the chart, you can just reference the cheat sheet to see if anything you're seeing on the chart is a pattern on your cheat sheet. Right? So I identify patterns using the 4-hour and the 1-hour time frame. Right? So obviously I'm going to get a bit advanced now, right? And let you guys know, first thing that I see when price came to this low is that we had a really strong movement to the upside. A nice shift in momentum. Very, very strong movement. Right? On the 4-hour time frame. And since then, right, price came down. You can see a type of downtrend. Price coming to fill all of this imbalance. So all of this space where you could see that price did not form any flags for continuation or anything like that. All of this white space needs to be filled. It's called imbalance, right? Basically, right? So which is what you have here. So you can see here, price made a sharp movement up, and then price came and filled all of this space, right? Till we get to this level here. Now, is there a pattern here that I can identify? Is this a pattern? Is this a continuation pattern? Because a continuation pattern would be me first identifying a sharp movement to upside or downside, and I need to see a pattern that tells me that price is going to continue now to go to the upside, or it's going to continue now to go to the downside. All right, and what I can see in front of me is a descending channel. I could see a descending channel. Right? Nice flag, nice continuation flag, impulse, flag, and now I'm looking for the continuation to the upside. Right? So channel, sorry, parallel channel. Gonna start from here. I'm gonna come to here. I'm gonna spread it out. Right? And that is what I see. All right. We got the highs, we got the lows, and we got rejection in the middle. So we're identifying key support and resistance on the daily and the 4-hour. Then on the 4-hour and the 1-hour time frame, we're looking for patterns. So on this 4-hour time frame, we've identified a descending channel. Right? We've identified the descending channel. So now I'm gonna drop down to the 1-hour time frame. And can we identify any other patterns that would suggest that the trade is ready to take off? The trade is ready to move to the upside. Yes, I can see one. So inside of our descending channel, we already know how the descending channel works. So when we have a descending channel, we're looking for price to break to the upside. And when we have an ascending channel, we're looking for price to break to the downside. So in this descending channel, which is our continuation flag from the impulse, we're looking for price to break to the upside. We identify the channel on the 4-hour time frame, and now we come down to the 1-hour time frame to see if there are any other patterns that we could identify that would tell us, okay, price should be ready soon to make that move to the upside. All right, and what I could see is a W forming. Right, that is a pattern that I am identifying now on this 1-hour time frame. I can see a W, right, forming. Okay, that's what I am seeing. All right, so we've identified the 1-hour pattern. We've identified the 4-hour and the 1-hour pattern. We have a W here now, right? And then number 3, it says, look for your point of interest using breaker structure and retest within your flag. So within this flag, you want to look for your breaker structure. So your inner support and resistance zone of which you would like price to break out of and retest with an inner flag for you then to look for your entry. Okay, so for me, right? For me, I'm gonna zoom in here. This area here, I'm gonna make it a different color. All right, there. Just gonna put it as green for now. This area here would have been my point of interest. Price was consolidating here for quite some time. So for me, I would want to see price break this resistance and then retest it before it continues to the upside. So this is what I mean by point of interest, right? You want to see, a resistance or support, an inner resistance or support zone on your 1-hour time frame, right? That you would like to see price break out of. So you want to see the movement starting to happen. Because if we're looking for price to move to the upside, I want to see price giving me that shift. I want to see price starting to give me some strength to the upside. Right? And once price gives me that shift, I want it to break, the current resistance zone that it was in. So this would have been the resistance zone. Every time price came up here, it reversed. All right, stopped. All right, paused. So for me to consider, this trade, I am interested in price giving me a sharp movement, breaking this particular resistance zone, and then I want to get a retest on this zone. So once price retest this zone, then I am going to look for my entry, right? So what I would like to see here, we don't know yet what type of flag would form, but we can just, scribble up something, what it could be. Let's say that we have that type of movement, right? Um, Ideally, we want a retest of here. This is what we want. This is where we want price to come back to, right? So that would give us the break and the retest before we get the continuation up. So when I say look for your point of interest using breaker structure and retest within your flag, the flag that I meant then would have been your forward flag that you would have identified. We already know a W is forming on the 1 hour time frame. So we need to zone in now to look at, where price is currently at and identify an inner support and resistance zone. So if you're looking for price to go to the upside, you should be seeing that inner resistance zone, breaking with a sharp move to the upside, which is what we had here. Right? So for me now, like I tell you guys, I try to make trading very simple for myself. So if there's a point of interest, I set alerts. Because I'm not going to sit down and watch the charts 24/7. My eyes are not going to be on the charts 24/7. I have other things to do. It's not healthy for you to sit down and watch the charts 24/7. To be honest, it stresses you out. You're assessing every single candle that forms and how prices moving, and some people even torture themselves by coming down to the 1 hour time frame, not 1 hour, the 1 minute time frame, and watching every single thing that price does. Don't torture yourself like that. Once you set your point of interest, you can set an alert there. So if I am looking for price to come back and retest here, I am going to set an alert, right? I'm going to set an alert on my horizontal ray, so that when price comes down here and it tests this zone, it should alert me, because this is my point of interest where I want to look to enter my trade to continue to the upside. Right? And once I'm setting an alert on this type of resistance zone, what I do is that I carry it up just a little bit so that it gives me time to come and look. Because if my alert goes off now and I driving or whatever, it would give me time to come and look by the time it actually gets to the real area that I am interested in. So you could even mark it with 2 horizontal rays, right? You could say, okay, the first one is your alert line, and then the second one is the actual point of interest, right? So I'm going to put this here, and I am going to set an alert. I'm going to set an alert on my horizontal ray, Euro GBP crossing down my horizontal ray, right? And I can leave it as only once, and I can name it point of interest. So when price comes to my horizontal ray and it sends off the alert, I'm gonna get an alert on my I'm gonna get an alert on my app, my trading view app on my phone. Probably gonna get an email as well. And then if I'm on my laptop, I will get an alert here once the trading view is open. It makes it easier for myself. Try to make trading easy for you. You want to simplify the process. You don't want to be checking the charts all the time. So utilize alerts, right? Obviously, with the free account on TradingView, I think you only get one alert. Well, then when you upgrade to Pro, you get more than one. Okay, so yeah, so once you set that alert and price comes down here, then we can look for our entries. Once I get that alert, I am dropping down to my 15 or 5-minute time frame. In this case, I'll use a 15-minute time frame. And, you know, we go to our MACD strategy. And what is our MACD strategy? Let's look for an area that I could use for the MACD strategy. Okay, so let's use this one here just to go through the MACD strategy. So we're looking to buy the trade, right? We're looking to buy Euro GBP. So on the 5-minute time frame, I want to see price giving me a sharp movement to the upside, but on a smaller time frame. I want to see nice, solid body candles making a movement to the upside. Then after that, I want to see price the MACD crossing over to show me that your GBP has passed on the baton from the sellers to the buyers. So I want to see that your GBP has passed on the baton from the sellers to the buyers, right? So crossover, nice crossover to show me that we had, a movement up. The baton has been passed on, right? And then we're going to look at the retest. So let it come back and retest, right? Once it retests, couple of steps that we're looking for to confirm our entry. First thing we want to do on the MACD, you want to see a couple bars light red. You want to see a couple light red bars. Then you want to see a space, a white space between the signal line and the histogram. So you want to be seeing a white space between the signal line and the histogram. Then, this is the good part, you want to make sure that the signal line is getting as close to that zero line as possible. So you don't want to get in, for example, if the signal line is far away from that zero line. This is the zero line here. So if you get any white space between the histogram and the signal line down here, try not to get in when it is far away. So this is a good example. You see you have the white space here between the signal line and the histogram. Try not to get in the trade here. Try to get in the trade when we start to move as close to that zero line as possible. So anywhere within this zone is good, because it's getting there. It's getting to, basically what it's showing you is that the sellers are losing their momentum. If you're using it when it's all down here, there's a possibility that as the signal line starts to come up towards the zero line, the sellers pick up their momentum again because there's so much space. And often not, I have seen it before, right? This is a good example here. You can see where the MACD is concerned. You had space between signal line and the histogram, right? You had a couple of light red bars, but the signal line was far away from the zero line. And then what happened? As the signal line came up, what happened? The sellers picked back up momentum again. Right? So to avoid all of this, I try to get in as close to the zero line as possible. It helps you. So I wait for that signal line to get as close to my zero line as possible. It doesn't necessarily have to be crossing over, but it should be within arm's reach, basically. Right? As close to that zero line as possible. Right? So that's basically what I look for. That's what I look for when I'm entering a trade. So which one we were looking at? We were looking at this movement here, crossing over. You would have gone in, somewhere around here in this zone. Right? And then from there, you will set your stop loss. So you go in here. Right? Set your stop loss below the last low. Give yourself a little room on it. And then let the trade take off from there. Right? You could let the trade take off from there. Right? Just a reminder, obviously, when you're using the MACD strategy, so when you're looking at entering the trade, you want to compare the lows, right? So obviously, we were looking at this. So the current low that you're looking to get into, you want to make sure it doesn't surpass your previous low. Because if it surpasses your previous low, then you need to reset the strategy and go again. Right? But, real simple MACD strategy that I learned from one of my mentors, still one of my mentors out there, Steven Cylinder. He would have had this strategy for so long, right? He had a strategy for a while, and it's worked for me. It's really worked for me, right? It helps in terms of getting really, really nice entries. And the only other thing in there that I cracked down on was when I'm going to get into my trade using that MACD strategy, which is waiting for the signal line to come as close to the zero line as possible. Because you don't want to get into a position where the momentum has picked up again and your stop loss hit, basically. All right. So those were, let me see, let's look together. There are 4 steps, and I just went through all 4 on your GBP. So you guys have an idea of, what I was referring to when I said we're looking at, top-down analysis from the daily and forward time frame, identifying key structure, then identifying patterns on the 4-hour and the 1-hour time frame, right? Looking for a point of interest using breaker structure and retest within the flag, and then finally using the MACD strategy to enter. So what am I looking for here, right? I'm looking for price to probably eventually come down to my zone here. At this point, the MACD is probably going to be over here, right? I want the MACD then to cross over to give me a shift up. At this point, I want to see price with the shift up, right? With the MACD basically giving me a strong move to the upside. So I should be seeing price aligning with the MACD basically. I want to see a strong movement, nice, solid, full body candles to the upside that, is in alignment with the MACD. Once I have that, I want to see price retest. By this time, the MACD should cross back over to the red histogram, right? And with all the MACD rules that we just went through, in terms of space between the signal line and the histogram, a couple of light red bars, waiting for the signal line to get as close to the zero line as possible, right? Once we do not surpass the previous low, so this being the previous low here, once this current low does not surpass this, and all of our confirmations are met on the MACD, then we can look at getting our buy and taking Euro GBP up to the upside. You can use the previous low for your stop loss. And that's it. Those are the 4 steps. And I am telling you that this will work. It has been working for me for quite some time, and it can work for you too. But it requires practice. It requires practice. You need to practice all 4 steps. You need to practice the step of identifying key support and resistance on the daily and the 4-hour time frame. So get a couple of charts, change them to the line chart, identify your M's and W's using the horizontal line. It helps you a lot, right? Once you've done that and you feel as though you've practiced it enough, right? Then you can look at step 2, identifying patterns on the 4-hour and the 1-hour time frame. So you want to look for reversal pattern, or you want to look for a continuation pattern on your 4-hour. And then on your 1-hour, because you're now starting to zoom in on the zone that you're interested in trading, you should be able to identify the pattern on the 1-hour time frame as well. So if you're looking to buy, you should be able to identify some type of pattern that signals to you that the trade is going to buy. Don't just enter because the trade is at a support and a resistance zone. You want to trade in confidence. So you need to be confident about your setup. So for me, being confident about my setup means that I should be able to see signs that my trade wants to move to the upside if I'm looking to buy Euro GBP. I want to see patterns that tell me we're going to continue to the upside on the 4-hour time frame and on the 1-hour time frame. Right? Then I need to identify some structure, some inner structure, inner support and resistance zones. Because if I'm looking to buy Euro GBP, and this is my structure here, I need to see a strong movement breaking that structure. I basically need to see the baton being passed on from the sellers to the buyers. And the only way I'm going to see that is if I can see the buyers pushing price up with some nice, strong, solid body candles. And then we can look at our MACD strategy for the entry. So this is important. This is a trade that I am looking at for next week. So I just thought that I would, teach on it because I am looking to take Euro GBP to the upside, right? And a lot of my confirmations have been met already. We had the 4-hour, you can see here, we got a nice 4-hour continuation pattern after this huge impulse. On the 1-hour time frame, we have a W forming. So that should start to give me the push to the upside, right? My point of interest on this trade was here as my resistance. I was looking for this zone to be broken, right? And I had it here. So we had a nice, strong, solid move, breaking this zone, right? And now I'm just waiting for the retest. I'm going to look and monitor here to see what type of continuation pattern is formed here as my retest to then get into Euro GBP. right? So I'm looking for price to come back to this zone, anywhere in this zone. And once price comes back to this zone and my alert goes off, then I am going to drop down to my 5-minute time frame, and I am going to use my MACD strategy for entry. Right? And your GBP has a long way to go. So getting in at the bottom, remember you want to buy low and sell high. So getting in at the bottom, as you can see, we're at the bottom of this flag, right? Even if you didn't take the full entire move, right? Even if you didn't take the full entire move, you can at least get into here. You don't even have to take it to here. You can at least get into the middle of here. You can catch that move, this move here. All right? So if you have to get in from here, where my point of interest is, and you have to come to here, that's 53 pips. If you go to the top of that flag, it's over 123 pips. So there's a lot of movement, right, for your GBP. So I will encourage you guys to mark up this chart, just like how I did it. I encourage you in your free time, might it be today or tomorrow, right, to do your top-down analysis on the daily and 4-hour time frame. Identify your key zones. Identify your patterns on the 4-hour and the 1-hour time frame, right? And then make sure you identify your point of interest for the breaker structure and the retest. And once you have that, you can then, once price comes to your point of interest, you can then drop down to your lower time frames for entry. This will be a very, very, very nice trade. I will encourage you not to miss it, because this is going to be a really, really, really nice trade. Right, so I'm going to stop the recording now, and then we're going to run through this week's analysis.